Today we're with Nate Donnay, who's the Director of Dairy Market Insight at INTL FCStone Financial. He's headquartered in the Twin Cities, but he travels globally in order to assess markets around the world. In fact, you're speaking to us today from Ireland, I believe, Nate.
That's correct.
Tell us, you provided a great overview of the global situation for us in our September 3rd edition of DairyBusiness Digital magazine, but you're attending a conference right now in Europe. Tell us a little bit about how things are looking at this point.
Sure. From the supply side, things don't look too bad. We've seen a significant slowdown in European milk production growth, and our current forecast is that European milk production is going to be running about 0.5% to 1% below year-ago levels in the fourth quarter. And production in the U.S. has been a bit disappointing as well. So when you put it all together, Europe plus the U.S., New Zealand, Australia, Argentina, we're moving from something like 2% in the first quarter of this year to something less than 1%, maybe 0.5% growth for the fourth quarter. So that the supply side doesn't look overly bearish. The issue that we're dealing with right now is that global demand is fairly weak. And I thought it would start to bounce back here in September, but so far there's no evidence of it coming back. So the outlook has turned a little bit more bearish on weaker than expected demand. But overall, it's still not a dramatically bearish outlook. It's more of a steady to a little bit lower here, short term on the pricing.
One of the points that you made in your piece for us, and that you explained has a big impact on international markets, is the not the demand side, but the impact of the tariffs. Here in the U.S., of course, there's concern, but you mentioned that that's kind of it's a factor, but it's not a driving force yet at this point anyway. Tell us a little bit about that, if you would.
Yeah, when we had worked through the potential impact from the tariffs, we were coming out with something in the range of, it was maybe reducing U.S. prices by 20 to, on the high side, 70 cents a hundredweight. And so it's not beneficial for U.S. pricing, but it's not the biggest driver in the market right now. It's this weakening global demand that was the bigger impact. Now, since we wrote that article, we now have the July U.S. export data, and there was a significant slowdown in the shipment of U.S. dairy products to China during the month of July, which was the first month that the retaliatory tariffs were in place from China. Our whole milk powder exports went to 0 in the month of July after running 2,000-3,000 tons in the months previous to July. Cheese exports slowed down significantly. Dry whey exports were down 25% compared to the April to June average. But some of that was likely going to happen anyways. You can look at something like lactose exports out of the U.S. to China in July, which was down by 10% compared to that previous 3-month average. And China didn't place any retaliatory tariffs on the lactose. So we were already looking at a slowdown in Chinese demand for some of the U.S. whey products. So it's hard to short-term sort of figure out how much of the slowdown in shipments to China is tariff-related and how much of it is related to more generalized demand issues.
Because your assessment for us in the article was global demand, and you reviewed the global situation very nicely, but maybe you can help us understand, here in the U.S., the economy is going well. The new employment figures were just announced this morning, in fact, at over 200,000 jobs created and unemployment dropping to 3.8%. What do you see as the impact of basically a pretty strong U.S. economy on dairy product demand and therefore consumption and impact on price?
Yeah, absolutely. short term, this weak global demand is showing up in prices in New Zealand right now, where they have butter down in the $1.90 per pound range. They have cheese stuck. They were down to $1.59. They're back up below $1.60s now. But prices in the U.S. and Europe are still holding together fairly well. We're sitting right now in September with milk production near seasonally low points. We're sitting here with relatively constrained growth in the Northern Hemisphere. We're in the lead up to the holiday demand period. We're reopening schools in the U.S. right now, and that absorbs some more dairy products. And like you pointed out, most of the macro fundamentals in the U.S. are supportive to consumption. And so I think we're seeing fairly good domestic demand in the U.S. for the cheese and the butter. We're at a seasonal low point for production, and that's supportive for pricing. The issue that we're going to run into is if this global demand doesn't improve, we're going to get to the second half of November or early December. Milk production is going to be turning around on a seasonal basis and headed higher. The holiday demand is going to be done, and we're going to have to clear the milk somewhere, which is likely the export market. And if the demand isn't there, U.S. and European prices are going to go through a reset and drop down to those New Zealand, Oceania type price levels by late December.
Well, I'm sure our viewers and listeners will be less than thrilled with what you've told us, but we do appreciate your realistic insights and your assessment. We're speaking again with Nate Donnay of INTL FCStone. He's given us an assessment in our Dairy Business magazine and in this conversation today about the international situation for global supply and demand of dairy. Nate, thank you very much for being with us.
Thank you.